Welcome back to another video. In today's video we're going to go over what Fibonacci is in Forex trading, how do we use Fibonacci, so let's get started. First thing first, please pause this video and read the disclaimer below. Once done, please continue with the video. Okay, so I'm hoping that you guys have read the disclaimer by now, so let's get started. A lot of people must be confused or thinking, what is Fibonacci and how do we use Fibonacci in trading? There's multiple ways that we look at Fibonacci. There's an example here. Again, these are horizontal levels, as you can tell. The levels in them that we draw. It's a tool that's available in TradingView. It's a tool that's available in MetaTraders as well, that we can use for our trading. Again, it's like a support resistance type of thing. A previous video I've made on support and resistance, so if you don't know what support and resistance is, please go and watch that as well. That's a really useful video. But again, it acts as support and resistance levels in the Forex market. It's mathematical. It's to do with numbers or the percentage. So let's just say, whether it's a retracement or whether the price is expecting a certain level or a percentage. So there's different ratios, like the 23.6%, the 38.2%, the 50%, 61.8%, the 100%. There's also the 88%. So these are the most typical levels that a lot of traders use, which is why I've mentioned them here. These are the levels that you can use as well. And we do this Fibonacci we draw a Fibonacci by getting the most recent swing high to swing low, or swing low to swing high, depending on the direction that we're going. I'll be attaching an example on the next slides as well, so please stay tuned. Again, Fibonacci is a really important tool. A lot of traders like to use it. It helps you understand what particular level of the Fibonacci is the market respecting, and what we can do at that particular level. So we can take a probable factor as an additional edge to take a trade. Now, drawing a Fibonacci, like I've drawn one here for you as well. It's a process that obviously involves identifying the levels, which is the most swing high, most recent swing high and swing low. Then there's obviously for an uptrend, there's obviously you identify the most recent low to swing high. So it's vice versa. It'll be the opposite for downtrend. So I've given a by example Fibonacci here that I've drawn myself. So as you can tell, I got the tool first. I got the most recent swing low, and I drew it to the most recent swing high. As you can tell, these are the major factors. Now the price has gone from the low to high, which is the 100%, and then it's come back and respecting the 50% level or the 61% level potentially. So we can take a buy trade here and anticipating that the market will continue its trend. So this is like a retracement discount that the market is giving you for you to enter the trade. Let's just say if you missed all of this move here and you're thinking, oh, it's too high to enter here, because also you get dropped out, it's way too high to enter here because the market's made this move. So now you can wait for the price to come back 50%, 61%. So whichever level that the price is respecting, you can take a trade from there. Stop loss below 1 or 2 levels, depending on how big your risk appetite is and what your trading plan is. And we can anticipate to go up to 100% or even past above 100%, which is the extension level, as our TP levels. So again, Fibonacci, guys, a lot of traders use Fibonacci. It's a concept that's been used by me on daily basis as well. It gives the traders the edge. It gives you an idea of what the market is doing, how much discount the market is giving you, where the price is coming back to, what level it's respecting, and then again we can use this information to take the trade and to know that this is the factor that we've got, this is our edge, these are our confluences, and the probability of the price respecting this level is really high. Again, on this situation I've drawn a buy Fibonacci, but the sell Fibonacci would be the opposite. So we'll be drawing it from here till down there. And again, if we do that, then we'll see that the price has come back to again a really good discount level, and we could take a sell from here going down back to the low of the Fibonacci, or past that, past that level where we've drawn, so to the extension level as our TP level. So again, it's really important, guys, that we understand this. We use Fibonacci retracements. So this is a retracement. and as a thing that, you know, where the prices come back to a certain level, and now we can take the trade if we miss the move, and we can use extensions as our TP level. Again, I've driven the extension to minus 0.2%. You can set the settings on TradingView as well. You can also set the settings on MetaTrader 4. It's really important. I'll be dropping a video on that as well, so please stay tuned, and hopefully you'll be able to see that, you know, with Fibonacci you'll see different things. Like, for example, you'll see that, you know, you've managed to get a good discounted price. You've managed to go an extension level as your TP level, and then it's a really good tool, guys. I use this myself as well. Again, there's different things for Fibonacci as well in this slide. So you can use Fibonacci levels like the 50%, the 61%, the 38%. We can also use that as a retracement for the price to come back, for the price to give us a bit of discounts. When the price goes up, it creates a higher low and it comes back to the recent lows for you to take the price back up high. So it's basically giving you a discount. Again, there's limitation to Fibonacci as well. It's not always accurate. You know, it might not always respect a particular level, so don't think that, you know, Fibonacci will be 100% accurate, because it's not. There's extension to Fibonacci as well, like I said to you, that we use that as a TP level. Like any tool, Fibonacci is just another tool that we use to increase our probability in trading. So it's not 100% guaranteed that with Fibonacci you'll see a really high success rate. Yeah, you might get some trades right, but you'll also have some trades wrong as well, because nothing in trading is 100%, guys. We just use that as a potential tool for reversals, as a potential tool for continuation, as a potential tool for TP. So it's really important that we use the proper risk management and do not rely on Fibonacci alone to make our trading decisions, because then we'll be finding ourselves in really deep trouble. Thank you so much, guys, for watching this video, and I hope that you'll be back for more. Please like, please subscribe to my channel, and leave a comment below if you need any further help, and I'll see you in the next video. Thank you.